There's been quite a lot of news this week which could be, or even should be, of interest to property investors, landlords, or anybody else who makes a living out of property. First things first, I have to make a confession. In my video about the changes to stamp duty that are coming up on the 31st of March, I said that nobody was really talking about this, but actually I did the BBC a little bit of a disservice because after Googling around the subject, I'd found that they actually ran an article back at the beginning of January quoting the Halifax, who said that the stamp duty changes are going to motivate first-time buyers. Yeah, well, they probably are, aren't they, for all the reasons I was talking about in my last video. But if you're wondering what I'm talking about, I'm not going to restate it all here and now because I talked about it in my last video. And if you want to watch that, then just go to my channel, my YouTube channel, and it's this video here. So that was the first thing. But what I wanted to talk about in this video particularly is a few things that are happening in the economy. And now I know I keep going on about the economy, and you might say, well, Peter, isn't this meant to be a property channel? And yes, it is. But the property market works in line with and because of the economy. So the economy runs everything. So it's crucial to know exactly what's going on. And just a few days ago, and it may have been a week ago, but it wasn't that long ago, Sky News had this little teasing snippet on their news feed saying, "Secure a deal now, mortgage warning amid swap rate fear." And the gist of this is that at the time, the bond market, the gilt market, the government borrowing costs were going very, very high, very, very quickly. And of course, there was the whole story around Rachel Reeves going to China and whether she should or not. It just looked like interest rates could potentially start reversing, although we've been hoping for interest rate cuts this year. And because of inflation figures, the amount of cuts had been sort of pushed back from several to maybe one or two if we're lucky, and the interest rates weren't going to change very much. We suddenly had this situation where cost of money to lenders was just going up and up and up. And Sky News was saying that advisors were suggesting that if you needed to get a mortgage, you need to start thinking about it now because rates are probably more likely to be going up than going down. But then suddenly we had this, a surprise fall in inflation. And coupled with what we could call a surprise fall in inflation across the pond in America, suddenly yields on the money markets, interest rates on the money markets suddenly started going down again. And the narrative changed at the beginning of this week. We went from this position where rates were going to be sort of quite sticky, weren't going to move very much, potentially even going up, to a narrative where now everyone's saying, oh, actually, maybe, although it's only a tiny little fall in inflation, maybe the Bank of England and over in America, maybe the Fed now have the opportunity to cut rates. Now, will they or won't they? Obviously, we don't know. Come back this time next year and we'll know exactly what happened. But we know that the Fed have got a meeting at the end of January, and the Bank of England have got a meeting at the beginning of February. Now, the way that the Fed react to this may give us some clues to how the Bank of England are going to react, because, as I've said on this channel before, central banks tend to work together, not necessarily, hand in hand all the time, and it may be that they'll have slightly different timings on this, but the narrative is now that there's scope for interest rate cuts to come back. And in fact, one of the Bank of England's ex-advisors was quoted in the papers just this morning as saying that he thinks there should be 6 rate cuts this year to avoid a recession. Now, I don't want to say I told you so because nobody likes that. Nobody likes a smart you-know-what. But I don't get a chance to say it very often, and maybe I shouldn't say this until something actually happens, but I have been saying for a while that I've been feeling that rates will need to come down this year because things aren't going that well. And in fact, just to add some ammunition to my argument, this was reported just yesterday saying that the UK economy is disappointing despite a return to growth. But the thing is, the amount of growth which was recorded over the last couple of months or quarter or whatever was minimal, and we could probably lose it in the rounding, to be honest. So things are not that great. So the Bank of England and central banks around the world are actually in a bit of a bind because economies aren't that great, despite what governments might want to tell us. And there's the potential of inflation coming back, but they're not sure, and they're a bit cautious about cutting rates just in case, but it seems like they're going to have to cut rates, which is what I said all along. But we will see. We will see. Will that have an effect on the property market? Well, yes, of course. Now, two ways of looking at this. If the economy isn't doing very well, then you imagine that that would drag down the property market at some point, although there is a time lag in property. It doesn't react very quickly to the macro economy. The other way of looking at it is that if interest rates are cut, will that be a boost to the property market? Well, yes, it is, but it may not boost the property market to the extent where the property market's actually booming, but it may just offset some of the drag which is caused by the economy. So we'll have to see how this plays out. This I thought was really interesting. Now, not the bit about Spain at the top, where it says, if not Spain, where? Which I think is a reference to the fact that the Spanish are considering putting like 100% tax on properties bought by foreigners, which is intriguing, given that you imagine tourism and people moving to Spain is actually quite a source of income and wealth for the economy. Not that, the bit underneath, which is looser loan rules, could get economy on the move. And this is all part of Rachel Reeves scrambling around now trying to find growth. And she's been talking to business leaders about where bureaucracy and red tape could be cut. And as part of that, they're thinking about perhaps possibly making mortgages easier to get for first-time buyers. As I was saying last week, first-time buyers are the foundation of the market. If you want the property market to move, you've got to look after the first-time buyers. So they're thinking about looking at the multiples of income and how much money banks are allowed to lend to the higher risk first-time buyers, and really just seeing what they can do to facilitate younger people or first-time buyers getting their hands on the money, notwithstanding the fact that from a lender's point of view it could be risky or riskier. But Rachel Reeves is basically saying to them, look, we've gone down the risk-averse route for too long. We need to sort of loosen up a little bit. So that is really interesting. If that happens, that could be a bit of a boost for the property market. But the one thing which really strikes me about this is, and I don't know whether you've seen any of my videos about the 18.6-year property cycle, but this is exactly the sort of thing you would expect to see when we're getting close to the peak of the market. Now, this isn't financial advice. I'm not saying that the property market is about to crash imminently. All I'm saying is that those who talk about the 18.6-year cycle and who believe in it, and I have an open mind to it, I'm not saying it's right, I'm not saying it's wrong, but they will tell you that the property market is scheduled to peak either this year, probably towards the end of this year, or maybe early next year. And this is exactly the kind of story which you would expect to see when we're approaching the peak of the property market, which suggests that there's a chance, I'm not saying it's a certainty, but there is a chance that this year could be a good year in property and next year could be a crash. Who knows? We, as I say, come back this time next year and we'll have a much better idea. But I just thought this was fascinating. And if you're enjoying this video, then please don't forget to like, follow and subscribe. And please also come over to my website, thepropertyteacher.co.uk, that's thepropertyteacher.co.uk, where you'll find loads of resources, including free special reports, plus my very popular The Successful Property Investors Strategy Workshop and the Successful Property Renovators Workshop.